All right, guys, we are here today a little bit early. Let's get some music rolling here. Tesla earnings came out massively helping the market, and let's do a poll. Is the stock market crash or correction over? Let me know how you feel about that. So we got a lot of earnings releasing today. We had AT&T, Tesla earnings yesterday. We had some other stuff too, but yeah. Boeing is supposed to release at 7. So Boeing's supposed to come out like 6 minutes ago, but I don't see Boeing yet. I see GD. I also think we had 30-year mortgage came out at 6.9%, so interest rates are going up. You know, a lot of stuff is up for a lot of different reasons. So the president about 11 hours ago said tariff reductions on China. He said 145% is very high, and it won't be that high. It will come down substantially. It will not be zero. It used to be zero, end quote. And so that, along with like a mix of good earnings, a mix with Secretary Bessent thinking that we're going to have some easement in the tariff battle, along with, again, good earnings, has caused the market to run. Look at Tesla. Tesla at 255s. That's the first thing we want to take a look at. We got the QQQ all the way up to almost 460s here, running almost 450s, or almost 460s. And so, again, President Trump said yesterday that the hefty rate on China is going to be significantly reduced. That's why markets are down. That's the big news that happened overnight. He negotiated with Chinese. He said they're going to be significantly reduced after he negotiates with Chinese president, expressing optimism about a trade deal. Again, he said, quote, 145% is very high. It won't be that high. It's not going to be that high. It won't be anywhere near that high. At an Oval Office meeting, he said it will come down substantially, but it won't be zero. The overall tariff level imposed on China is 145%. It remained in place. He said, quote, we're going to be very nice. They're going to be very nice, and we'll see what happens. But ultimately, they have to make a deal because otherwise they're not going to be able to deal in the U.S., referring to China. He said his relationship with Xi is a reason for being optimistic about a deal. The White House said yesterday that it was setting the stage for a deal with China, seeking to reassure a lot of scared investors right now in markets. And again, Treasury Secretary Scott Bessent told a private meeting of investors yesterday in Washington that he does expect de-escalation. That's the other news that came out in the trade war between the U.S. and China. China has levied retaliatory tariffs on American goods, of course, but a lot of people think these are going to start easing. The president also said Tuesday that his team will, quote, set the deal when the 90-day pause has ended if trading partners are not able to reach one. And he said that he has been in talks with many world leaders, you know. And so that's what's essentially going on right now. We asked, is the stock market crash or correction over? I don't know if I'd call it over. We'll see. What's up, Christopher? What's up, B? What's up, Alpha? Yeah, he also came out with some stuff that said he's not going to fire Powell either. So one of the things that said, he said, he also said that he had no intention of firing Fed Chair Jerome Powell, potentially calming fears about Fed independence that flared up on Monday. So, yeah. Uh. Do you think he's going to follow through with that? Let me put this up on the screen so I can actually watch this. Yeah, well, technically he's not allowed to fire him. They're an independent government. Or the Federal Reserve, while it sounds like a government entity, is not one. And so he doesn't actually have the power to fire him. But he can put pressure out there. That's something that, you know, can happen. He can pressure them to not work anymore. And so it's possible for him to get rid of him, but it's more difficult than you think. You know. And then again, the market's flying right now. Here's the Tesla stock. We covered the earnings yesterday, but honestly, we had over 1,000 people here for the earnings release for Tesla. But again, Tesla schedules their earnings call an hour and a half away from their earnings release. And so I'm just not going to sit there that whole time and wait. And you know, but we'll cover Google on we'll cover Google on Thursday. And everything else really. Next week is a powerhouse week of economic reports and data. So next week we got all kind of stuff going on. You know, I'm a little bit cautious about this news ripping markets up because we don't really have anything set in stone yet here. You know? So we don't really have anything finalized on this news report. Like, I would love to be optimistic, and I am, but none of this really means anything until we get a deal done, you know? But I'm optimistic. Yeah, I mean, the markets are up big. Tesla up big, Apple up big. Apple up to like 205s. If I put a 3 chart up here, hey, look at Apple. So yeah, things are up big for sure. I mean, they look good. Don't get me wrong. They definitely don't look bad today. Apple up to 206. Bessent? Okay, gotcha. Yeah, I have no idea how to pronounce his name, to be honest. Again, I don't think... I mean, his words had some weight. But I think it was the reduction of the tariffs on China news that really influenced the market in a big positive way. Yeah, I mean, I like the market to go up. Again, next week's the busy week. And today we have like flash manufacturing and some other PMI data here. It's not the biggest day, but we do have some stuff today. We've got like flash manufacturing and services PMI, new home sales, Bostic speaking later on this afternoon. And then tomorrow we got jobless claims, durable goods. Friday we got consumer sentiment data. So we got some stuff going on. But yeah, we'll see. Yeah, I've been doing much better in my shorts than longs. Yeah, I mean, I think they had the stat that this was the worst start to a presidential term in history since going back 100 years. In terms of like stock market, this is the worst start to a presidential term in history, according to them. And so I think obviously if you're the president, you're not really liking the legacy that leaves you here. So I'm sure, like I said, I think they're going to get a deal done. I think they're going to want to get a deal done on both sides really here. I don't think they're going to play around with this stuff too much more. So I tend to think they're going to get a deal done just because they need to. Both sides do. Both sides make so much money from each other that they're going to want to get a deal done. I don't think it's going to be something where either one are going to be independent of each other in terms of business. I just don't think that's feasible for either one of them. I think they're both going to really work to get a deal done. Now, when the deal gets done and what the market looks like and the economy looks like afterwards and leading up to it is a different argument. But I tend to think they're going to get one. Yeah, and I'm looking at Tesla up here, 255s. The Q up to 458s. Everything else kind of struggling to hold up here. Apple up there over 206 level. That's a big spot, a big level here. See if that holds. We're watching the NASDAQ here. Surge. Trying to surge. Yeah, I tend to like going to, I like going both sides. Like, I'll go long and short. I do better in shorts for sure, especially over the last month, obviously, with the market crashing down. But I like longs as well. Like, yesterday we made some longing stuff, so. Market struggling. Market looks like it wants to go higher, but it's also kind of sideways right now too. So yeah, I mean, shorting, there's a little bit easier momentum. So like if we get really close to a low of the day, we can have a little bit higher probabilities in attacking different levels and stuff like that. There we go. Yeah. So, but it varies. It depends on like what's going on in the market to justify the shorts, you know. Elevator downstairs up. Yeah, for sure. I mean, that's kind of the price action we see a lot. And that's why it's easier to short sometimes is too, because you get the elevator down kind of action. Yeah, we trade futures. We lost our green streak yesterday. We had a 13-day green streak. It's over now. Not really happy about it, but that's all right. Look at this flush in the market here. Wow. I'm looking at the futures market, so I might be a little bit more zoomed in than the normal person, but not really the biggest flush, but kind of predictable too, I think. A little sideways action after a big upward move. Yeah, we do have flash PMI data coming out today too. Intel unveils new auto chip and new strategic collaboration with Model Best and Black Sesame Technologies at Shanghai Auto Saw. CEOs of Walmart, Target, and Home Depot privately warned U.S. President this week his tariffs could disrupt supply chains, raise prices, and empty shelves, according to Axios, citing sources. All right, so we're still kind of heading back down some here too. What's interesting is that I'm trying to check some other stuff here too. Let me see. That's pretty good. Let's see. Green, green, green. I'm testing some other stuff in the background here, chat. Boeing earnings were supposed to come out at 7, but I'm not really seeing them right now. So Boeing earnings are late. They were supposed to drop 20 minutes ago. Not really seeing them yet, though. Not really doing much yet. So the biggest difference between Forex and futures. Well, the biggest difference between Forex and futures is what you're trading. In Forex, you are trading currencies. And in futures, in some platforms, you can trade currencies as well. But the biggest difference is currencies. In futures, you're trading futures. But what I mean by futures is like you're trading indices. Like you could trade the NASDAQ 100, you could trade the S&P 500, you could trade the Dow Jones, you could trade the Russell, you could trade some currencies, you could trade gold and all these other commodities. So in futures market, you're mostly trading indices and commodities versus Forex where you're trading actual currencies. I mean, they're all based off of trends, but honestly, I'm just not as used to trading them. So, like, I'm not nearly as used to trading them. Forex, that is. Trading Bitcoin versus stock commodities futures, which is best to trade? I mean, best is subjective, so everybody's different. So building permits just released for whatever reason, like really early. They came out at 1.467 versus 1.482, so lower than last time. Showed up at 0.5 versus previous of 1.6. So building permits honestly took a hit. Look at this. So building permits kind of took a hit. Like, look at these. So they're kind of down a lot here, huh? I just wonder if we're going to get like choppiness right now, or we're going to get some good action or bad action or what. That will get you every time I've done it myself. Yeah, Pawn, I'm going to send you a message. Yeah, send you a message, Pawn. Okay. But yeah, you see the building permits come out. So building permits are out. Mortgages are actually higher too. So mortgages are higher. How's the market? Be careful with gold right now. Yeah, isn't gold flying up? Let me see. Where's gold at? I'm trying to see. So I got a couple different reversal. It's pretty good. Gold pull back. Let me see where it's at. Yeah, gold is at 33.40s. It's still really close to all-time highs. I mean, it's not. It pulled back a little bit, but it also broke highs, yesterday? So got up to 35.09s. 35.09s. You know, and again, today we've got flash manufacturing. All right, so look at the NASDAQ pulling back some here. Looking at our poll numbers, we asked people, did we think the market crash was over? We're honestly pretty split down the middle here. 47% say yes, 53% say no. Boeing to seek FAA approval to increase 737 MAX production as losses narrow. So mortgage rates, the interest rates increased, which you can kind of follow mortgage rates by looking at like T and X here. Like here's T and X. These are bond yields. Bond yields and mortgage rates follow each other to a certain extent, as well as just broad interest rates. So mortgage interest rates are up to 6.9% now, 6.9%. No recession? Yeah, I think we got to wait until GDP comes out. I think we have to wait until GDP comes out. Once GDP comes out, that's when we're really going to see what quarter one GDP looks like. Because if quarter one GDP isn't negative, that means we've got some time. We've got some time. And look at the pullback on the NQ. Head and shoulders on the graph. Where? Which one? And I'm still looking at Apple because I think Apple's influencing the market a lot too. But Apple trying to move. We got we got Apple moving a little bit. We have Tesla flying up on overnight, even though Tesla pushed back the robotaxi event and everything. So NQ nosediving. Yeah, which is kind of cool because like I've been building and you might hear from this soon. I'm still kind of waiting to see what, but I've been kind of building some indicators in the background, coding, and honestly, they're pretty good. They're pretty good. I'll give you guys some more information later, but they're pretty good. I've been building them. Like here's one of the latest ones that I've built. And honestly, like, look, to show you guys, on a 1 minute chart, it's honestly pretty surprisingly like accurate. 5 minute chart as well. I have two different charts that I'm kind of building up for this thing, but it's pretty good, pretty good. Like it's not 100%, nothing's 100%, but like look at this. Here's a 5 minute one. Oh wait, I gotta get this out the way. Yeah, here's a 5 minute one. It's not 100%, but it's close. Look, green, up, red, down, green. You got a little follow through on it. Red, down, green. This one maybe not. This one worked. And then you got a couple more too. So it's like 4 for 5 out of these. Gold head and shoulders on what time frame? 1 hour. All right, let me look. That's a big head for small shoulders. But I see what you mean. Like we got a big peak and then lower highs as a shoulder coming up if we bounce a little bit more here. So I see what you're talking about. Like you're talking about this right here. And oh wait. Yeah. So hourly chart you said. So you're talking about the head being here, shoulders being here and here? Is that the head and shoulders you're talking about on gold? Maybe. Yeah, like I don't want to show you guys too much, but like look, so here's what I got on my charts right now. This is a 5-minute chart. Like look, red signal here, downward pressure. Green signal here, right at the bottom, bounce. Green signal here, bounce. Red signal here, drop. Green signal here. We got a little follow through bounce there too. Red signal right at the top, dip. This one, maybe you could say this one didn't work. This one we got to follow through here as well. So one of those didn't work. And so, and honestly, you can keep kind of going back and looking at it. Like, look, green at the bottom, bounce. Green, bounce. Red, dip. You can keep kind of looking at it, and it's pretty useful. Like, look, green, big bounce. Red, dip. I'm not gonna tell you guys the conditions I've used, but it's for a 5-minute, trend predictor. It's pretty solid. No, not really high volume. To be honest, if you look at my trades that I take, my trades are usually much faster trades than this. So, like, I'm usually getting in. I'm just kind of playing around on this as, like, a programmer. My trades are usually much more short term, to be honest. I don't really trade off of a 5-minute chart either. And so, honestly, I haven't taken any trades from these. Not yet, at least. Maybe I will, but I don't know, bro. I'm just kind of horsing around over here, trying to show you guys what I've built. But y'all, I mean, you can't really say much when you look at it. Like, it's pretty on point with the trends. Are you buying, John? I mean, I already bought a couple weeks ago. And so, like, I've already bought a couple weeks ago. So I'm just kind of sitting tight in what I bought right now. I don't know what I'm going to do with it either. But yeah. Do you think AMD is a good stock because it's like 90 bucks? Maybe. Can you make it for sale, John? How would you go about that? I don't know. Not right now. I'm not gonna sell it right now. I'm just playing with it. There's an old saying, if a hot girl texts you about crypto, block him. Poisadon. I'm joking. So this is actually an inside joke. My daughter, I used to mess with my daughter. And I know it's Poseidon, but I used to mess with my daughter and intentionally pronounce it wrong. There's a movie about like a boat in the sea that like goes sideways and they've got to get rescued from it. And it's called Poseidon. But every time I would say it, I would mispronounce it. I would say Poseidon or Poisadon or just all these random names just to kind of spark frustration. And she would say, it's Poseidon, you know. And video at 88. Yeah, it's pretty solid. Tesla back up to 250s. All right, guys. Hey, we got some data this morning. That's better than nothing. Yeah, is the bear market over? Is the crash over? I keep asking. We're pretty split. 54% of people think no, the bear market is not over. 46% of people say yes, it is. We had AT&T earnings this morning. We had Jim Cramer say yesterday that the bear market rally could become a real recovery. Which is, yeah, nope. I don't like that. You know, it's Jim Cramer. Nvidia has had a little bit better time recently. Nvidia all the way back up to 104s, almost 105s here. And we will be trading futures later. It's a little early now, but we will be trading futures later. Palantir getting close to $100 a share. Palantir up to 99.50s. Nvidia up to 104s, over 100. Palantir almost over 100. Apple back over 200. Tesla over 250. Meta over 500 again. Google over 155s. AMD trying to break 90s. Gold still pretty high though, but it did pull back. Amazon all the way up to 180 plus. Netflix over 1,000, I think, right? Let me see. Yeah, Netflix over 1,000. So a lot of stuff's back, honestly. I'm not saying it's going to continue to come back, but a lot of stuff is back up. So we will see what that means. Hey. All right, guys. Sorry, I'm back. I had to talk to Kira about something. But yeah, Palantir up to 99.50s here. Yeah, no, he could definitely say something. and it all goes down to 10 to 15%. So Alan Newton says we were already in a recession. When? And I'm not talking about 3 years ago where everybody's going to be like, they changed the definition or whatever they're going to say. I'm talking about right now. Are we in a recession right now? We're not. But are we in one? We're not. You know. You know why we're not in a recession? Because we don't have one negative GDP quarter, let alone two. And so we got to have at least one negative GDP quarter, in my opinion, to say that we're in a recession. Like, we got to have at least half of the recession to say that even if we get one negative quarter, if the second quarter is not negative, we don't have a recession. And so you got to have at least one negative quarter, which we do not have at this point in time. You know. When were we in one, Alan? So when? Yeah. I mean, listen, if you're going to say like a couple years ago in 2022 when we had two negative GDP quarters and then we kind of bounced back pretty quickly, I would call that a little mini recession. But yeah, you could probably argue that we were in one. But it depends on how you look at it, right? It really does. There's a lot of stuff that it really depends. A lot of people talking about whether this pump is going to hold. You know, whether this is a trap for the bulls or whether we are going to continue running up here. I don't know. I really don't know. We may be in stagflation. Yeah, I could argue, I could probably say that we might be in a little stagflation-y environment. High inflation, weak economic data. GDP is definitely pulling back, I think, a little bit for this current quarter. It's not going to be a 2.5 or 2.8% like it was last time. And so 2.3% maybe. And so I do think we're pulling back some. And I think we also have signs of high inflation. And we have, the big thing with stagflation is it's usually leftover inflation from, like, stagflation typically occurs, and it's a precursor to a recession when we have weak economic data. The Fed gets, we have high inflation. The Fed gets hawkish, restrictive, raises interest rates, pushes the economy down a little bit. And the consequence of that is a weak economy, but we still are dealing with the high inflation that we once were. And so even though the rate at which inflation is going up has decreased, we're still dealing with persistent inflation that hasn't gone literally down. It hasn't actually gone down. And so that's a stagflation environment. And that's kind of what we're in now, to be honest. That's kind of what we're in now. We'll see. But that's kind of what we're in now. We'll see if it holds or what happens, though. Bears being greedy. I think we are going to bounce all over the place for still some time. These moves are not instantaneous. It will take time to play out. We are trying to make long-term calls using daily action. Yeah, no, I agree. Smells like a trap, bull trap. Some people are saying it is a bull trap. It's a correction, not a trap. John, if I'm correct, you were upset about the rates being lowered in September, but not upset that we aren't keeping up with the world lowering. Yeah, I mean, I'm not really super upset that we're not cutting rates right now. And I've been pretty consistent about this, you know. So again, if I didn't like us cutting rates in September, and I thought it was too early to cut rates, and now I'm still saying, hey, I don't think we need to cut rates. That's pretty consistent, I think, you know. And again, the reason I'm like this, again, I don't freaking know. I don't know what the right move is. The Federal Reserve obviously has so much more data than I do. And so I don't freaking know, right? Like, they got way more data than me. But I also recognize that inflation is a scary thing and that I do not want to rise anymore. I don't want inflation to go up. I don't want more inflation problems, you know. And so I'm okay with weak economics if we don't get high inflation, you know. And that's kind of backwards to what a lot of people are looking at now. Like, a lot of people right now are worried about a weak economy and they would rather a strong economy with high inflation. I'm kind of the opposite. I would rather a weak economy with no inflation, you know. And so, yeah. In the end, one thing that I'm pretty consistent with is I fear inflation, whatever that means. And so I don't want prices rising anymore. They've gone up too much in 5 years. That's what most people are really unhappy with. They're not really, most people are not unhappy regarding GDP or unemployment or anything like that. Like, that's not what most people are generally unhappy with. I know last year was an election year, so everybody's like, ooh, but like the real, like, unemployment's been pretty low. GDP's been decent. The real reason people are unhappy is because prices are freaking crazy and they've 2, 3, 4x'd in 5 years. That's why most people are unhappy. And so in that regard, that's my fear, is inflation. I don't want to see prices go up anymore, and I'm worried about inflation rising. At the same time, though, a lot of people, because of these tariffs, are going to pivot now towards economic fears versus inflation fears because of the tariffs. The tariffs are going to make people honestly fear both to a certain extent. Like, the tariff fears are going to make people honestly fear both to a certain extent. And that's okay. I don't think anything is necessarily wrong. It just depends on, you know, your own personal bias, I guess. I don't think any of it's necessarily wrong. So, yeah. Mortgage rates are actually up. If rate cuts go down, mortgages are a little bit different. So mortgages are a different animal versus, like, okay, so the Fed funds rate, the rate that in which the Fed is influencing is the rates they use for, like, home equity lines of credit. It's the rates they use for adjustable rate loans. Like, these are the rates that are adjusted, you know, in adjustable rate loans. And so, or at least they're directly influenced by them, I should say. And so, short-term rates are influenced the most. Long-term rates, like mortgages, are a different animal, and those take time to influence. You know, those are really a lot influenced by bonds and prices and all that stuff. And so, it's just a different thing, right? Mortgages are indirectly influenced by it, but it's in a different way. Mortgage rates go down with the Fed rate? Kind of, but indirectly, I would say. Like, mortgage rates are a different animal. What the federal funds rate is short-term. Okay, so the The federal funds rate is short-term interest rates that banks charge each other overnight. That's what the Fed funds rate actually is short-term interest rates the Fed uses to charge each other overnight. Now, these short-term rates called the Fed funds rate influence a lot of different things indirectly and directly, but they directly influence adjustable rates, loans, right? So the rates that are being adjusted are these rates to a certain extent, or at least they're directly influenced by them. They also influence home equity lines of credit. Most short-term rates are going to move in parallel with each other. Now, long-term rates are kind of a different thing, though. They're a different thing. And so there's a trickle effect in long-term rates, and it takes time. And so that's the first thing you got to understand, is that they're not directly influencing mortgages. What moves mortgages, it's a different animal. It really is. Bonds and supply and demand in bonds. Hey, what's up, Faye? Yeah, so the news that happened overnight that's influencing the market right now is that the president said that they were going to ease down on the China tariffs. He said they weren't going to be 145%, that 145% was high, and that they were going to get something done, and that they were going to lower rates. They were going to lower the tariff rate to China, most likely. That is why markets are down. The president said, or Secretary Bessent said that the trade war was unsustainable and expressed expectations for de-escalation. The president spoke saying he weren't going to, hit them with his highest tariffs if they thought they would. They're not going to be 145%. They're not going to be zero, he said, but they're going to be noticeably lower. Tesla had a positive reaction to earnings, and Tesla earnings kind of influenced everything else. And that is what has dragged most of the markets up this morning. And that's where we're kind of at now. So, but again, like what moves mortgages are mostly bonds. 10-year treasury yields, one of the most significant influences of mortgage rates, particularly the 30-year fixed. Investors compare the returns of buying bundles of MBSs versus safer treasury bonds, and that's why yields are like relevant. If treasury yields rise, investors demand higher yields for MBSs to remain competitive, which then pushes mortgage rates up for borrowers, vice versa as well. On the downside, if treasury yields go down, mortgage rates often follow downward. And so treasury yields are what is going to move mortgages. And the reason I say the Fed rate indirectly moves mortgages is because Fed rate influences treasury yields, and then treasury yields influence mortgages. And so you also got to pay attention to like inflation, see if the Fed's doing QE or QT, which, injects treasury bonds or MBSs, pushing yields down. You know what I mean? Like that's how QE is influencing mortgages, which is QE is when the Fed buys a bunch of treasury bonds and other financial assets like MBSs. I say this every major economic stream, but this is what's happening. The Federal Reserve and QE, it's a more desperate decision. They're stepping in there, injecting liquidity by buying a bunch of bonds, buying a bunch of MBSs, increases demand, pushing yields down. Higher demand, lower yields, right? So anything that pushes, when the Fed steps in and injects liquidity into treasuries, a good example, it increases the underlying price of treasuries and decreases the yield, because the price of bonds and the yields of bonds have an inverse correlation. And so if yields go down, prices are going up. And that's what happens when the Fed injects liquidity through QE, which again is a little bit more desperate thing than just kind of lowering interest rates. By injecting liquidity, it makes the prices of the bonds actually go up, and the yields end up going down, which consequently can help lower mortgage rates, if that makes sense. And so that's kind of the nature of it. That's why I say bonds move things, if that makes sense. So look at Tesla decreasing here. Let me see if Pawn sent me any news. Oh, no. Well, yeah, we're eventually going to do QE. The question is when. Right now, we're still doing QT and MBSs. So we're still doing MBS QT right now. So I don't know. Hey, John, is the student loan news great for SoFi? What's the student loan news? Yeah, we got flash PMI data coming out later. Flash PMI data. So we got time, but... Yeah, Mama Pawn, do it. So, jiu-jitsu, great. Like, yesterday, my son's finally old enough now where I can kind of, like, mini spar with him. I can't actually spar with my son because he's too small. But I can drill things with him and show him what he's doing wrong. And so yesterday, my son and I told my son wants to watch YouTube. Usually, I don't want my son playing video games and then watching YouTube about video games and never doing anything else, right? So I always try to balance it and make him earn it. I'm like, hey, if you want to watch YouTube, you gotta train jiu-jitsu with me for 30 minutes. And he's like, fine. And so he can actually build a skill in something. And so we drilled arm bars, we drilled snap downs yesterday, we drilled back takes, bow and arrow chokes, and collar chokes, as well as like setting up a rear naked choke where you got two setups. You can either get the rear naked choke and then get your hooks in afterwards, which is my preference, especially in no gi. I would rather latch onto the rear naked choke. They're so worried about defending it, then I can get my hooks in. But a lot of people prefer the opposite way, where they get their hooks in first and then they get their... Anyways, that's what we drilled. And then by the end of it, my son was hitting me with arm bars. And my son's like 11, but his arm bars hurt. Like, I was letting him like latch on. The big thing with arm bars from guard is you got to learn to lock the arm down. If they pull the arm out, the arm bar's over. And so I told him to lock the arm down, and he did it pretty good. And he started hitting me with arm bars, and it hurt too. Like, it hurt. So great sport, honestly. Really good cardio. Will keep them in shape if they keep doing it. Just a good sport. Good sport. The real question is, are the biggest American bondholders, Japan, China, UK, gonna sell US bonds? SoFi? Where is SoFi, man? So it's at $12. SoFi seems like a good company, and SoFi, just to put this into perspective, stands for social finance, guys. It's like a credit lending company kind of thing. Social lending company. Yeah, it's up a lot too since, it's been moving up in a period of time when a lot of stuff's moving down as well. So SoFi up. Looks good. Looks good. They will sell bond to cover margin calls. Yeah. All right, guys, and we're going to start trading a little bit today, too, here. I'm going to put some stuff up. We'll put all these three on the charts. We'll get some trading done today. I'm slightly down on the day on this account, though, but we'll get our green streak account in there. We got our levels on the charts. See, part of me wants to short this. I'm going to try to short it. It's kind of a risky short here, but one contract. We might add up to this level and then cut it if it breaks over this level. Because the 200 exponential is right here. And so if we break down underneath this, it could signal a turn. And I think we're also extended on the upside too, so we got some room. A little risky of a short here though, but we're going to keep it tight. We're going to try to buy in now and then add to it if it works. If it doesn't work, we're just going to cut it for a tiny loss. Yeah, Palantir's been flying last couple weeks. Again, we do have flash services and manufacturing Data today, 945. I don't know how much is going to move things. All right, so again, we're using this level as a resistance, this 68 level that we have on our charts. It's kind of a risk. We're already in a downtrend, but we've kind of had a little slight downtrend. And so if we keep going down, we might have something. But if we don't, it's going to be tiny loss, which is what I want. Like, I just want to keep my losses small. I want to add to my winners and then take my losses with only like one contract if I can keep it that way. There we go. All right, we're going to add to this. We added one contract to this now that we're green. We got a nice little red candle here. Now we're kind of... It's a big down wick. I don't like that anymore, of course. Got 20 seconds until this candle closes. Question is, do I want to unload one contract here and limit my risk? Probably. I'm going to go ahead and take one off here. That's a big retracement liquidity grab right there. So I'm just going to get out. That's a big retracement and liquidity grab. So we're down small on the day, but honestly, I'm not mad at that trade at all. I think that trade was a good... I think that trade was a good try. I think that makes sense to attack it there. And this was just a deep liquidity grab. Palantir to 100. Yeah, isn't Palantir at 100 right now? It's almost at 100. That's one of the more interesting moves, I think, today, too, on Palantir. It's right there. It's at 99.30s. Looks like cutting it there was the right decision. Any expectation at the opening today? I really don't know. I don't know what the opening bell is going to give us. We'll do a poll later on today, but I really don't know. I think I got to get rid of some of these levels too. I think some of these levels are okay here, but we're 75. There's 75. We'll leave 75 on the chart. I'm going to have to draw some more. 50. I mean, I think 50 is obviously one, but I think we gotta just get rid of this. Maybe move this up to 9s here. Look at that surge. Is this news related? Glad I got out, bro. I got out in time. Crypto update. Bitcoin over 90,000 today. Bitcoin flying back up at 94s right now. 94,000. All right, so look at this big rise up. I'm watching 18.9 here, 18.9. Will Tesla price hold? All right, Bitcoin's still rising here. Look at the NASDAQ pop. So NASDAQ's coming up some. All right, so again, we're going to go ahead and post all the biggest stories in the market today. We had Tesla. So again, if you want to know the 5 biggest stories influencing the market right now. All right, so we got the big 5. Again, if you want to check out the 5 biggest stories in markets right now, every day we post a summary on our x.com page. There's the link right there. Give me a follow. Great way to help support the channel here. We appreciate it. Let's see if this 18.9 level holds. See, look, we're tapping that 18.9 level, but Tesla's still rising. NASDAQ still rising. NVIDIA still rising here. But let's see if 18.9 holds right now. And again, we'll talk about it. So the biggest 5 stories of the market right now. Again, give me a follow on x.com. There's the link. But the biggest 5 stories in the markets. Number 1, markets rebounding sharply. U.S. stock surge. Dow is over 1,000 points. S&P up 2.5%. NASDAQ up 2.7%. Erasing Monday's big losses as trade worries eased and strong earnings came out. We have trade de-escalation hopes. Treasury Secretary Bessent called U.S.-China trade war unsustainable, expecting de-escalation. The president also signaled that the tariffs for China would drop substantially and stated no intention to fire Chair Powell. Calming markets. This helped markets a lot. Earnings beat fuel rally as well. Better than expected quarter 1 results from EFX, 3M, PHM provided a boost to sentiment in individual stocks. Tesla reported a miss. Auto gross margin compressed. They confirmed affordable models on track for the first half of 2025. And Robotaxi this year, stock has been pretty volatile though. IMF cut its U.S. 2025 growth forecast to 1.8%, citing tariff impacts. Gold briefly hit a new record high at $35.90 before pulling back. And that is where we are at now. And markets are back up some. Again, gold broke all-time highs yesterday at about 1 a.m. Early this morning, I guess, at 1 a.m. And yeah, that's been dragging markets up here. Appreciate the follows, guys. Thank you so much. Appreciate it. Apple and Meta fined $700 million for Europe breaching tech rules. ETH has come back. Man, dude, ETH has been struggling, dude. Bitcoin up to almost 94,000 here, yeah. SoFi up to 12 ones. I've heard a lot of people talk about SoFi. Another thing back is Amazon, dude. Amazon back a lot as well. Yeah, ETH has been struggling. Doesn't look good. But, you know, who knows what it's going to do, man. If you haven't already, check out TopStep. TopStep gives you a 50K demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose the base one. If you pay for the base one, that is, it's $50. The middle one's $100. The top one's $150. So it's limited risk. If you fail, that's what you lose on these accounts. If you pass them, base one, you get a $50K funded account, 90% split. Prior to the split kicking in and all of them, you get to keep your first $10K in profit. Great rules for your funded trading, and just a great way to learn how to trade. Most day traders lose. Learning in the structured environment is a much better way, in my opinion. Most day traders lose thousands in the first couple years day trading. It's called market tuition. Instead of losing thousands and thousands and thousands of your own dollars, I would try this instead. They give you a 50K demo. If you fail, you're out $50. It's not the end of the world. And that's a much better way to learn in a structured environment. If you pass it, 90% split, then if you're good enough, you can then withdraw and fund your own account. In the futures market, you can basically day trade the SPY and Q price action. You can day trade gold. You can day trade currencies in some platforms. You can day trade commodities as well. Great way to learn when most day traders lose. And I wish I had something like this when I first got started. Top Step has paid out hundreds of millions. They fund thousands of traders. They're a great resource for trading. And if you want to check them out, here is the link. Great way to help support the channel. I'll also pin this to the top of the page. And yeah, I appreciate the love. Thanks so much. I'll go ahead and pin it to the top of the page. There it is right there. And we'll see what happens, guys. Market is flying back up, though. So market's looking healthy this morning. Tesla back up to 255s. Got over this 18.9 level. Let's watch 18.925. I have no idea, Omar. I have no idea if the market's going to go up or down. No idea. Like, we're down slightly on the day today. Slightly. Oh. So that's the crystal ball. I need to get one of those things, man. Probably double top and then flush. Maybe. Any data today? Yeah, we got manufacturing and services PMI data at 9:45 today. That's it. And then tomorrow we got jobless claims. Friday we got University of Michigan consumer sentiment report. So we got some stuff, but what is the massive tariff news? So there's a couple big ones, right? The main one is that Treasury Secretary Bessent called U.S.-China trade battle unsustainable, expecting de-escalation soon. The president also signaled that the tariffs for China would drop substantially. And he also stated that there's no intention to fire Powell, calming markets. These are all the things that are moving markets up this morning, is that tariff news. That tariff news is definitely impacting markets on the upside. So, yeah, the tariff news is definitely impacting markets, and that's what's dragging everything up today. All right, guys. So we're getting close to highs. Close to highs. The momentum's definitely on the upside. I'm going to short this down to this 18.9 level if we can get it. Very small short. I'm kind of attacking negative momentum here, but that's okay. I just want a little pullback down to this level here. We'll see if we get it. We're taking very small trades over the last few minutes. If we get some positive action, we'll add to it. But right now, a lot of stocks are kind of popping up. So we're We're not going to hold this too long. Alright, we're going to go ahead and cover that because that's all we wanted. We wanted to move down to this 18.9 level and we basically got it. So I will take that. We got some... Yeah, so is Bessent scheduled to hold a press conference at 10? Is he really? State of the Financial System, Treasury Secretary Bessent at 10 a.m. Ooh. Do you guys want me to stream this? Should I stream this, guys? I guess is the question. I guess I can. You guys know me. I try to cover stuff for you. But should I stream it? All right, so Bessent said, I am looking forward to joining the IIF tomorrow morning. This was yesterday, to share my thoughts on the state of the global financial system. 10 a.m. Treasury Secretary. Is it Bessent or Bessent? Somebody corrected me earlier. I don't freaking know. Let me ask AI. Bessent. Yeah, Bessent. Bessent. So it's Scott Bessent. Got it. And see, again, these little pullback areas, like, look, remember, I talked about wanting this little dip here at 18.9s. You could also play it on the other side. Like, I decided to short from here to here. But you could also play it on the other side where you attack the momentum, where you rip up over a big level, pull back, bounce, right? Now, I like the pullback area a little bit more. I think it's an underappreciated zone of profit that you can attack on the downside here. 2 pullback levels here. I think it's less fake out sometimes at these spots. But obviously, you could always play the other side too. As long as you document good levels, it becomes a little bit easier to trade. Yeah. I said, yeah, my kids had school this morning. So, all right. So here's that bounce right at that 18.9 level here. We're able to predict that pretty well. Again, Bitcoin over 93K. The president said that crypto needs regulatory certainty. Regulatory certainty. Meta just broke up over 426 this year. Apple up to 206. Yeah, we'll cover Scott Bessent's thing at 9. So we should be streaming it. Yeah. We have Flash Manufacturing and Services PMI at 945. That's probably the big one. And then we got Scott Bessent's stuff at 10 a.m. So that's what we got today. Tomorrow we got jobless claims. Friday we got University of Michigan data. So that's kind of where we're at now. Yeah, Bitcoin flying up, honestly. Bitcoin, ETH is even back up. So why has ETH, so I'm assuming ETH has kind of lost some steam because of Bitcoin. Like, Bitcoin has evolved to a point in which a lot of people might not consider the need for ETH with everything how it's going with Bitcoin. Like, the evolution of Bitcoin has made ETH a little bit less needed. More obsolete. Not completely obsolete, of course, but more obsolete. Amazon breaking highs of the day are getting close. New highs of the day on Amazon are now 182.20s. 182.20s. Yeah, we got Google earnings tomorrow. Your commentary on macroeconomics can be useful. Hey, thank you, sir. I appreciate it. I try to teach people about it, like, so people understand it. Most people don't understand it. Most people follow politics and they use that to drive their sentiments, like election years. Oh, it's a recession. Apparently, according to, you know, I'll put it this way. Whichever side does not have power, apparently there's a recession every single election year. If you ask them, hey, bro. How you doing, man? Love you, bud. Hey. Well, that's a different thing. That's a different thing. I love you. Look at the market rip up, guys. Look at the market fly up here. Wow. Sorry, I had to show my son this video, but yeah, market's flying up. Amazon up to 182s. Made 1,000 on Tesla last night. Nice, man. Gold is now outperforming the NASDAQ over the last 5 years. Gold is up 100% in 5 years. NASDAQ is up 89% in 5 years. So gold is now effectively outperforming the NASDAQ. Keynote remarks participate in a conversation at 10 a.m. Eastern Standard Time today. It's hosted by the Institute of International Finance, specifically their Global Outlook Forum, which is taking place on the sidelines of the IMF and World Banking meeting. This topic is expected to be the state of the global financial system. Some sources indicate the event may be streamed online. So yeah, that is what's going on today, 10 a.m. Scott Bessent, I'll never mispronounce it again, Bessent. There was a point in time where I would say, how would I pronounce Palantir? I can't even pronounce it wrong anymore. Palantir. I would say Palantir for a long time. Palantir is doing this. Palantir is doing that. Never again will I mispronounce Palantir. Never again will I mispronounce Scott Bessent. Tesla is what I'm going to say. Tesla. Yeah, I mean, look at this. I talked about 18.9s. I'm not going to say you're welcome, but close enough. All right, we got this high of the day level here on the NASDAQ right here. We'll document that. Beautiful trend on the upside. Beautiful trend here. Meta's ripping up almost to 530s right now. Apple at 207s. 206s, 207s. Google up to 157s. AMD up to over 90. SoFi up to 12s. Amazon up to 182s, almost 183s. Bitcoin flying up, almost up to 95s, up to 94,000 in Bitcoin futures. I'm going to call it a Z Bryant, and if you don't like it, cry about it, bro. That's all I'm saying. You know, with love, cry about it. We're at 935s right now, 935s. Apple at 206s. Yeah, we got Google tomorrow. Google earnings tomorrow. We will be streaming the entire thing, of course. We also have jobless claims, unemployment filings tomorrow as well. So a lot of stuff going down tomorrow. A lot of stuff going down today. And honestly, I'm ready for this slow week to be over, bro. I'm just glad, honestly, that my stream can average over 800 people during the slowest week we have every quarter. Like every quarter we get one slow, super slow week where we don't really have much going on. And really, for whatever reason, they've consolidated everything to next week, right? So like next week is a freaking crazy week where we've got jolts, we've got PCE data, non-farm payrolls, unemployment, jobless claims. We've got, what else do we have next week? We got a whole bunch of stuff next week. Yeah, next week we got jolts, CB consumer confidence, GDP data, non-farm employment, PCE inflation, Chicago PMI, jobless claims, ISM manufacturing PMI, construction spending, non-farm payrolls, unemployment. Not only that, but we have Apple, Amazon, all kind of earnings coming out too. Like the earnings that we have next week are bigger than this week. So next week for earnings, we have, hold on, let me talk about it. We've got SoFi, PayPal, Coca-Cola, UPS, JetBlue, Pfizer, Spotify, BP, Snapchat, Starbucks, Visa, Humana, Caterpillar, Microsoft, Meta, Robinhood, QCOM, Eli Lilly, Roblox, CVS, MasterCard, Apple, Amazon, Riot, Reddit, all next week. Crazy, honestly. Kind of crazy week. All right, so here we go. We hit that 942 level. You could also call this 950, I guess. But yeah, of course we're going to trade next week. Yeah. Because, I mean, you guys know me. Like, economic data's come out. We have thousands of people here. It's just been boring, man. We haven't had any economic data. We got our first, like, actual economic report at 9:45 today in about an hour. Services and manufacturing, PMI at 9:45. And then we got Bessent coming out at 10 with some economic stuff. I just hope it's not too long because I got stuff I got to do. Yeah, so again, we just tested the high of the day right here. That's why we rejected at 942. Okay, gotcha. Yeah, we went right up to that high of the day, broke it. Now we're testing 950, which I still think might reject it. Look, I might short this. It's a risky move, but I'm going to try. See if we get a liquidity grab at 950, rejection at this high. Come back down at least a little bit so we can take profit. And if we don't, it's okay. It's trying. It's not really doing it though. It's just taking too long. I mean, we got the liquidity grab, but it's not really big enough for me to capitalize on. All right, we'll go ahead and get out. All right, so we got exactly what we wanted. The rejection at 950, the big retracement. I don't think it's going to hold. We made a little bit from it. That's not bad. But I got to take some larger size in this. I really do. I'm like a huge wimp here. Yeah, that's why I don't really want to trade it too much. Like I don't really want to risk shorting this for an extended period of time. 950 might act as a resistance, and it did, and you can kind of see we use 950 as kind of our entry rejection level. But the problem I see is Tesla's still rising to 256, Apple at 206, so Apple's getting up there. AMD, guys, is flying up right now. So AMD, if we take a look at microchips, AMD up to 9120s here. Look at AMD run.
Likes you.
All right, so there's 950s again. Mercedes S-Class AMG 63. I like it. I like it. But most of the ones I like are the coupes. So you're talking about the GT63? All right, so look, that 950 level holding here, as I talked about. And then here's the previous high of the day, so we got a little wedge. AMD starting to dip down some, but yeah, I don't know why we're ripping up. Yeah, GDP's huge next week on Wednesday, and that's where we're really gonna see if we're trending towards a recession or not. You know, that's when we're really gonna see, are we in a recession or no? Y'all join my Discord as well. My Discord is completely free. Doesn't cost anything. Great way to hang out with us after the stream. We try to post news and stuff that's breaking here. There's our Discord link right there if you want to join it. Yeah, I don't know if I'm going to take larger size just because of like how well I've done with micros. And I think micros have a distinct edge in terms of like your ability to control your size. I can scale in and scale out of positions a lot easier with micros. And so that's what I'm going to try to do. But what do you mean 30s? All right, so we're making another push towards these highs. The problem is Tesla's starting to rip up here too. AMD looks like to be pretty good. Look at that 950 level still holding. Oh, 30-second charts. Nah, bro. It's too short term. I'm just not good at that, I think. All right, so we're still struggling to get over this 950 level. Apple's still popping up a little bit here. No, I don't want to look at the 1 second chart scares me. You know, 1 second chart is too scary for me personally. Good for that gap and downside, maybe. We got about 45 minutes. 45 minutes until the market opens. Yeah, I'm trying to find some bottoms here. Let's see, range. These aren't bad. All right, so we're still testing 950. We got over it for a split second. Look at AMD, though. AMD over 91. Tesla at 256. Yeah, y'all hit that like button. Hit the notification bell. We appreciate it. Help the channel grow some. All right, so look at let's watch 960s. I don't know where 960 the level came from on my charts. It's probably over here, but I don't know if I like it. Actually, we'll see. It's a little tight of a level, I think, but. All right, guys, we're starting to head back up. Let's see if 960 holds this level. Yeah, I can't do 1 second. 5 minute, 1 minute are usually my go-to. I guess I'm just gonna wait here. I guess I could attack this breakdown here, but all right, so 960 actually held pretty decently. Look at this 960 level. The problem is the momentum we're getting right now. Like, look at Tesla momentum. I'm getting some strength showing up on the charts. So, let's see if we go back to 950 and retest and then figure it out. Yeah, we're very close to 19,000, and that might drag us up for sure. Definitely possible. Like, you could feel the momentum on the upside right now. But I'm going to wait still. But where's 19,000? So 19,000, we got a little range above us. So it's testing that 960 level, but it's not really like, it's a little strong here. Look at Tesla. Tesla's part of the reason this is happening too. We got 40 minutes into the opening bell too, about 40 minutes. Yeah, when they announce that news, it'll probably be really good for Tesla too. There's a pretty large pullback here and some stuff. SPY ripping. Yeah, no, SPY's ripping. Tesla, one of the stocks that's flying up this morning. Yeah. Yeah, so we hit 950s. So we're finally getting a pullback here. I'll look at like 940s as a dip here and see if we can attack like a 940 pullback or so. Like if we get down to here, I'll play with it, but we need to get down there. Try to short this. Actually, I'm going to cut that. We got out quick. I think we lost $8, so. Just want to wait and see if we bounce. I like that 942 level here. I'd rather have that, but I'm trying to be patient as well. Yeah, we're gonna get ready to start trading at the opening bell too. All right, we're getting close to these highs again. Let's see if we hit them. Look at this run. Wow. Got here right at the highs. Right at this 960 level again. See if it's going to be a double top right now. Yeah, so we don't think he's going to fire Powell. That he's already come out and said that he's not most likely going to fire Powell. So that's number one. He's probably not going to fire Powell. Number two, they're going to ease on China a little bit, they think. Right? They think we're going to ease on China a little bit. And that's what we're hoping, at least, that we get. So we're ripping up over these highs, not really getting the opportunity. We're heading towards 19,000 though. That's where I think we're going. I think here's 75. Let's watch this. See if 75 turns into 1. Here's 19,000 up there too. So Look at this surge. Strength showing up. $75 didn't quite hit, but let's pivot to the other side. I grabbed it short. Hey, good luck, bro. Yeah, I mean, we're getting very close to the top of this range here. I don't know if it's a good area to short. I really don't know. I think we're getting really close to that 19,000 level. Something Pawn said earlier, which I honestly agree with. I like to use big milestone levels as part of like my system is milestone levels. And when I say milestone levels, I mean like highs of the day. I mean like big psychological levels, like you know, 19,000. And isolated levels where the highs are really, really obvious. Yeah. Like, we're so close to 19K, and I would assume the market hits it unless we get some bad news that shows up randomly. It's a lot of red show up just now, though. Yeah, it is tightening up for sure. Look at this candlesticks, man. Something's going on. Is there some news right now? Oh, it's the 8 a.m. scrum. Okay, gotcha. I was wondering what was driving all this like short-term volatility. IMF says increased tariffs are to push global GDP debt ratio up by 2.8 percentage points in 2025 to 95.1% of GDP, according to the IMF. I don't know if this is impacting things. Could be. But I'll put that link up there so you can see what we're talking about here. So we get some pops. There's some strength. Look at this pop coming in. I'm trying to get back up there, it looks like. There we go. I went up there and tapped it. Let's see what we get now. Tesla rising up. That's one of the reasons this is happening. Tesla on the upside. Just trying to get back up there. Tesla at 258, it's almost 260s. we're chopping back and forth too much for me to trade some, but Tesla's moving up. I'm trying to see what other stock action is going on. Apple's back up to almost 207s, which is the high of the day, exactly at 207 for Apple. AMD's been pushing up at 91s. Google up to 158. Meta up to 230s, basically, right around the highs of the day at 230s. Amazon over 180s. Apple's been surging up. Tesla has been fighting its way higher and higher since their earnings report yesterday. So yeah, I'm sitting tight waiting for the opening bell here is what I'm doing. Part of me wants to kind of buy a dip. But if I do, it's got to be like smaller size. So right at that 950 level again here. We're getting some movement down now. There's the previous high of the day right here at this 942 level. This is the previous high. But we're getting some pressure on the downside. Sell-off happening. Wow, look at this drop. Whoa, 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 whoa. Something's going on right now. Meta expands AI on Ray-Ban glasses to other countries. I'm trying to see what's dragging this down here. There's some pressure on the downside. I'm gonna buy this dip. I don't know. Part of me wanted to buy this 825 level too, but it's a little too late for it. We hit it, but we just didn't quite hold there. It depends on whether we think the downward pressure is going to continue. All right, so Vietnam is starting trade talks with the U.S. Just did. Vietnam says it has started trade talks with the United States. This is at least the third time it has said its trade talks have started. All right, so the China president Xi tells UN leaders meeting that China's efforts to promote international cooperation will, quote, not weaken, end quote. All right, so we're now under 825s here. We are pulling back here. I'm going to buy this dip. It's looking a little bit juicier here. A little bit juicier now. We got some value at the very least here. Very small size. Might add one more contract down to this 915 level or so if we can get it. And then a risk level of about 905. So a very small 10-tick risk is the plan. Got to get over 825s or so. I like the value of the trade here, but we're going to take 2 now. Oof, nasty. Yeah, so we're out. We're going to switch this account too, because I don't want to lose too much in this one. Just such a quick drop there, dude. Look at this candle. Something's going on. There's got to be some type of like red pressure. Boeing CEO says company is on target for positive FCF in the second half of 2025, according to CNBC. Something's dragging the market down here, though. This is weird. I don't see any news, so I thought the dip was safe to buy, but yeesh. Right, I thought a long was cheap, honestly, right there. And look at this bounce. So something is going on, though, that's influencing stocks. I think Google might have had some bad news because Google just gapped down from 573 in a 1-minute candlestick. So let me see if we can figure out what the catalyst is that influenced that last trade, because something just happened. Anybody see any news? I see General Dynamics says company delivered 13 G700 jets in Q1, according to a conference call that they had. Reuters poll. Okay, so Bank of England is going to cut bank rates by 25 basis points to 4.25% on May 8th. Says all 67 economists, Bank of England to cut rates 25 basis points each quarter to 3.75% by the end of this year, according to median forecast. Same as March poll. I don't know if that's moving things or not, but so maybe this is moving it. Look, there's the Bank of England poll that we got live. And I'm down less than $100 on that other account that we were trading. I just don't want to lose too much. I want to keep my losses small, manageable. Nvidia being reason, but no news yet. So is Nvidia. Yeah, Nvidia did have a pretty big downfall. So did Tesla, though. So Tesla and Nvidia both dropped pretty substantially on this. Like, look at this drop. Nvidia dipped the most. I'm trying to see if I got any Nvidia news that's showing up on the chart. Nike. Nike's up. Again, probably wants to buy this little dip here, but you gotta be smart with it. No pain, no gain. I like money. I like money too. Looking at our poll numbers, as the stock market crash correction over 50, we're pretty split over 1,000 votes. I'm going to do another poll here since we're about 15 minutes away from the opening bell. Are you bullish or bearish for today's open? Bull, bear. Vote on this poll. Let me know what you guys think. Here's the 200 exponential. We got 18.9 here. So I do want to buy, but we got so close to 19,000 and now we dipped that the volatility is just really strong right now. All right, I'm going to take one contract here, small. See if we can ride it up some. We got a nice little follow through initially here. I need to add a little bit to it, I think, but kind of flat. There we go. That's good. I'm gonna get out there, small little baby trade to start the day, kind of ink into it. The range is tight over the last few minutes. Like, look at this. This is the little range that we've had over the last 5 minutes. Although we are starting to edge higher. Let's see if 925 holds now. There's a pop at the very least, so that's good. See if we get over this. Nvidia 104s, Apple still up there at almost 207s. See, if we get a dip to 925s, maybe we can try to target this. Quite get a dip down. All right, guys, we got 14 minutes into the opening bell. 14 minutes. We do have some other stuff going live too here. We got 945 manufacturing and service PMI. All right, so look at this big rebound back up here. So I'm going to short this slightly up here, slightly, and we're going to add one contract up to 940s here, just because this is a previous high of the day. So just in terms of general range, we could move back down. See if we can ride it down here, and if not, it'll be very small. I didn't end up adding to it, although looking at it, maybe I should have. Should have added to it. Hold the rest break even, probably, to be honest. I kind of missed the ad. And wish I didn't, of course, but it looks like I missed the ad. to get out here. So we got out flat on this one. It might keep coming down, but I missed the ad that I wanted, so it's all good. Again, we do have Flash Manufacturing. So we do have Flash. So we got Flash Manufacturing and Services PMI in about 25 minutes or so. I'll put a timer up. It's not really, I don't know how much this is going to move markets, but it's in about 25 minutes. We'll call it 24 minutes just for timing purposes. We'll put a timer up as well. We got the opening bell in 10 minutes. And we got like new home sales and some other stuff. And again, it looks like my exit there was the right exit. We got out where we should have, it looks like. 67% say they're bullish. All right, so I'm watching 950 here. 950 seems to be a level. Apple's still trying. Tesla, again, one of the big reasons of the day, but Tesla's been pulling back for the last 10, 15 minutes here. Tesla was just moving with the market. Yeah, it's a little different now, though. Tesla honestly been pulling back for the last 15 minutes. Apple's been moving up. AMD, microchips. But the Nasdaq's been riding back up here, which makes me very bullish, to be honest, just because like we're getting close to that 19,000 level. The opening bell is just a different animal, though. So always remember, guys, I'm not an investment professional. I have no idea what I'm talking about. Might be wildly wrong about anything and everything I say. Sometimes I trade off stream. Sometimes I lose off stream. You're not going to see it. Don't copy me. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade smart. Remember, don't copy me. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. Understand all that stuff. Again, if you want to check out Top Step, link is pinned to the top of the chat. It's a great way to learn how to day trade. So services PMI is coming out at 945 pawn. Yeah, 945 services PMI. The EU stands ready to fast track a resumption of free trade negotiations with Australia, according to the European Chair of Foreign Affairs Committee. Fed's Goolsbee says increase in productivity growth appears to be a tech-driven boom. So Goolsbee apparently is speaking some stuff. Yeah, I'm not sure why you're saying random stuff, Benito. But it sounds like somebody's kid got a hold of something. No, I lost the green streak yesterday. The green streak's over yesterday. So, we'll be all right. All right, guys, you guys ready? We got 6 minutes left. 6 minutes left. Again, no PDT in futures. You can day trade the S&P, the Dow, the Russell Gold. It took me a long time to trade futures because what I did was like, I traded penny stocks, got my butt kicked, had success trading like the SPY and Q, realized I could trade the SPY and Q in futures, no PDT restrictions. And so I pretty quickly gravitated towards futures and never looked back. And so the futures market makes sense, and you can get your feet wet with something like Top Step. You could try it out. If you fail, it's not the end of the world. You know, great way to learn. And again, if you want to check that out, they're an affiliate of mine. I'm biased. I get paid by them, but genuinely useful. You can check out the link. It's, again, pinned to the top of the chat. Amazon flying up. NASDAQ testing highs of the day again here. Very, very close to it. I tend to think it's going to at least test it. I'll take 2 contracts in here on the retracement down here. Give it some time to bounce up. We'll use 950 as a risk. I don't want to add to this. I think I'm just going to wait. We'll let it pull back to 950, see if it holds. I'm going to take half off here. I don't like that at all, so I'm going to limit my risk, take half off and keep 1 micro contract and play with that. See if we get this bounce at 942s. The market's just freaking weird. A lot of ups and down swings. There's 942s, which is what we wanted, like 942s right here, but the momentum is just strange. Just all of a sudden, like slow, big red candles. And then a lot of time it goes right back up, so it's very weird. I don't know if this is like... Oh, we also have Treasury Secretary Bessent speaking today at 10. We'll see if he moves anything, but we're trying not to take too much risk on any of these accounts today, just ahead of the opening bell. We got 3 minutes. All right, so we're right back up. That's better. I'm going to go ahead and cut this and get out relatively flat on that position. Relatively flat. We lost a little bit, but we might be down like $10 on the day or something. So we're still getting into the open pretty neutral. Not really the easiest pre-market session to trade, to be completely real. And again, we got manufacturing services PMI. Yeah, look at NVIDIA pop up. So I probably could have held, but it did. We're too close to the opening bell. We got 2 minutes until the opening bell. AMD's ripping up to 92s right now as well. So yeah, look at these candles, man. These are big range, sideways, choppy candles. Like, look at this. Look how big the range is. This is almost 20 tick range of sideways action on a 1 minute chart. Weird. Not the easiest day for my trading. But All right, guys, we got 1 minute left until the opening bell. Let's do it. Let's see what we get. Hopefully we get something good, man. AMD has honestly been one of the stocks that's been like flushing up here. And again, we got manufacturing services PMI 945, flash PMI data. All right, so ahead of the opening bell, we got 30 seconds left. 30 seconds. All right, 15 seconds, guys. 15 seconds. All right, there's the opening bell, guys. There's the bell. Look at the market pump up. Here comes 19,000. Here comes 19K. I would buy this. It's just too close to the opening bell to buy it, but we're pumping up towards 19K. All right, I got to try to buy it. We'll play with it. Give it to me. A little risky of me, but hey, we got to have fun in this thing sometimes too. We'll take 2 and maybe regret. All right, we're going to regret this, I think. Yeah, it's just too crazy. I can't do it. We lost $30 trying to have fun there. I just can't do it. I really can't. It's too freaking crazy at the opening bell, guys. It's too crazy. And maybe it'll benefit us, but maybe not. So honestly, wow. All right, so honestly, I did just attack my other account that I've been trading on. That I was red like $100 on the day, and we got ourselves back to green attacking this candle wick. I would have made money. It's just too crazy. But we got ourselves back to green in this account on the day. You can see the green at the top. So I'll trade this one. The other one's my baby. I'm up a lot in the other one, and so I don't want to risk too much in that one. I probably should have stuck with this one the whole time. But here we go. We're getting towards 19,000. 19,000. And honestly, I think it's very probable we're going to break 19K. So let's try it again. I don't ever usually trade this close to the opening bell, to be honest. I almost never do. We're going to buy this dip. I'm trying to take larger size in this thing too, so bear with me. All right, we're going to take 6 contracts. We're basically flat. I'm trying to bet that we're gonna, there we go, that we're gonna go up to 19,000. Bring it to me. There we go. We'll hold the rest break even. All right, look, we're just going to cut it. I got scared out of it. We're green, though. We're green. We made money on that trade. Here's 19K right here. Maybe we get a pull back to 875. We'll attack that. 975. Still very early for me to day trade, but I think with the volatility that we're getting, it can kind of be justifiable. I got to be careful, though. Yeah, I cut my position, too. I wimped out, but it's all right. Again, here's 19K. Very probable we're going to at least test it. There's the test. Sometimes we break it and we dump down. So just be careful. We just broke 19,000. Sometimes we break it and we just dump down. And so I'm not saying that's going to happen. but it could happen. So just be careful. Be careful. I've seen it happen enough to where I'm very weary of holding past big whole dollar milestone levels like 19K. All right, so we broke 19. Let's see if it holds now. We broke 19. Let's see if it holds. AMD's breaking highs though, so that's going to help support it, I think, a little bit. Maybe not. Google pulling back some. All right, so there's the dump down. Hey. Whoa. Yep. Predictable. Predictable. Yep. Hopefully everybody learns from what I just said. You know, hopefully everybody learns. It might come back up, but hopefully everybody learns. Like, that's the top of the range. 19K, big milestone level. You know how many people are taking profit at that high? That's why this happens. You know how many people are saying, hey, I'm going to take profit at 19,000 exactly. We get up to 19K, people start selling. It might come back now. We'll see. But yep. Yeah, so again, look at the downward action here. Very predictable thing, to be honest here. Very predictable thing. We talked about it happening. Whole dollar at 19. You know, again, here's the edge playing these big whole dollar numbers. Let's talk about it. The edge is that as we get closer to this level, it becomes much, much more probable that we're going to test a big whole dollar milestone level like 19,000, right? It becomes much more probable that we're going to go back up and test that level. But another thing that happens, of course, at those levels is so many people set it as profit-taking levels. So people start unloading their positions here at this big whole dollar level. And so what happens is, like, you go up and you tap that level, and then we just get these huge dump downs, trapping everybody into it. And so that's why I'm able to kind of predict that, because I've seen it happen enough to where I understand a lot of greedy traders are going to jump in trying to attack some breakout at 19,000. A lot of other traders are going to unload their size there, and that's going to squeeze those longs down a lot of the time, a large percentage at the time. And so I hope that makes sense. That's really what it is. And so, yeah, I hope that makes sense. That's a big pullback, too, that we got. Yeah, look at this spike up. So some type of thing just happened. Look at this candle. Some type of news just happened. This is a news candle almost certainly here. So European Commissioner for Economy and Productivity says EU is not giving up on its closest, deepest, and most important trade partnership, the one with the US. Look at everything starting to rise here, guys. Some type of news catalyst just happened. Some type of catalyst just happened. I don't know what it is, but something just happened. Maybe the European stuff. Whoa. Something just happened. Fed Waller didn't comment on Outlook. Maybe this news. Maybe this news right here. What a weird day, guys. Y'all be careful. This has got to be catalyst-driven news just now, though, right? Let me see. White House reportedly mulling cutting China tariffs to de-escalate trade war, according to Wall Street Journal. This is what's going on. This is what's going on right here. I'll put the news on my x.com page. Follow me at Beginner Trades. At Beginner Trades. This is the breaking news that's happening. So again, at Beginner Trades, follow me at Beginner Trades. We just covered it. Again, according to Wall Street Journal. Again, I just posted it in chat. White House reportedly mulling cutting China tariffs to de-escalate trade war, according to Wall Street Journal. Listen, guys, at 5 minutes, I don't know if I can really touch this price action here, to be completely real. This is kind of shady price action, guys. This is not easy money right now. This is difficult money to make. I don't know if I want to take this type of trade here, to be honest. This is kind of scary. Y'all be careful right now. Yeah, this is crazy, honestly. Like, it's making all my support and resistance look like little baby candles here. Like, look at how much range we have. Like, this was the whole range of the morning for a long time. Like, look, this right here. And we just kind of wiped it out. Like, these, like, the range is crazy, to be honest, man. I gotta... All right, so again, the White House is reportedly mulling cutting China tariffs to de-escalate the trade war, according to the Wall Street Journal. That is what just showed up in markets. Yeah, y'all be careful. All right, so Baker Hughes expects global upstream spending to be down by high single digits in 25. Expect low double-digit decrease in upstream spending in North America, excluding Mexico. Tesla, under 250s. All right, guys, we got 4 minutes left. 4 minutes left before manufacturing flash. Now, again, just to put this into perspective, guys, okay, listen. Flash PMI data is prelim early data for the current month, right? This is PMI manufacturing and services strength for the current month, prelim data, right? So it's kind of the most variance heavy, the most volatile report. So Flash PMI gives a quick prelim indication of the current month's activity based on partial data released mid-month available for manufacturing and services. That is what drops here in about 3 minutes. 3 minutes from now, that is what comes out. I don't know how much is going to move markets, but that is what comes out in about 3 minutes. I appreciate the follows, guys. Thanks so much. Again, at Beginner Trades, if you want to follow me and kind of keep track of what's going on, at Beginner Trades. Waller didn't comment, and we're supposed to have Bessent speaking at 10 as well. So here, let's get ready. Yeah, the volatility is crazy right now, guys. I'm just a little nervous about taking any positions at all today, to be completely honest. Has not been an easy day to trade for me personally. We're slightly green, but somehow... President reportedly decided not to fire Powell after Treasury Secretary Bessent and Lutnick raised concerns, according to the Wall Street Journal. This is some more news that just came out. We'll put this up on screen. All right, so we got that news scrolling at the bottom of the screen here, guys. We have 1 minute left. I'm gonna mute this. We have 1 minute left. Again, remember, guys, not an investment professional. I have no idea what we're gonna get in the market today. No idea. We're steady looking at stuff here, but I have no idea what we're gonna get in markets. I'm gonna zoom in a little bit here. All right, guys, here we go. We have 45 seconds left. 45 seconds. Until flash PMI and services. 45 seconds. Services expected at 52.8. Manufacturing expected at 49. 49. And this drops in about 20 seconds. All right, here we go. 10 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. 49 for manufacturing is what's expected. 52.8 is what's expected for services. Here we go right now. Waiting. Waiting. Nothing yet. They're a little delayed. A little slow. Again, we're still waiting here. We don't have the data yet. It's not out yet for some reason. What a crazy day, honestly, in markets. Yeah, we're waiting on the flash data here. All right, 51.2 for global composite. PMI flash. Manufacturing came in at 50.7. 50.7. Global services PMI flash came in at 51.4. So services came in at 51.4 versus basically 54 expected. Manufacturing came in at 50.7. Both of them showed up weaker than expected. All of them showed up weaker than expected. Except for, actually, no, I'm sorry. Manufacturing showed stronger than expected at, actually, no. I'm sorry. Services showed stronger than expected at 52.5. We'll put this up on screen, but most of them, global composite PMI showed up at 51.2. Previous was 53.5. That was weaker than last time. Global manufacturing flash came in at 50.7 versus 49.1. So manufacturing came in stronger than expected. Services came in weaker. So stronger manufacturing, weaker services is what it is. That's what showed up. Here is the manufacturing, slightly stronger than expected. Services, slightly weaker than expected. That's the data. NASDAQ starting to push back up again. What a volatile day, guys. What a volatile day. And then we got new home sales dropping in about 13 minutes that we'll cover as well. Y'all be careful. Nvidia's pretty flat. Didn't really move markets that much for services and manufacturing. Amazon ripping up over highs. AMD pushing up. SoFi ripping up to 1230s. Apple still struggling to hold over 207s, but still slightly green since the opening bell. Nvidia basically flat since the opening bell, actually slightly red. Google up since the opening bell. Netflix up a little bit. And NASDAQ's pumping up on the de-escalation news overseas. Again, the big news that happened is that the White House is reportedly mulling cutting China tariffs to de-escalate the trade war, according to the Wall Street Journal sources. And again, we got new home sales dropping in a couple minutes, too. We also have President reportedly decided not to fire Powell after Bessent and Lutnick raised concerns, according to the Wall Street Journal. And again, guys, we got new home sales. Stick around. We got New home sales data, 10 a.m. Let's see what that looks like. Again, stronger manufacturing than expected. Weaker services. So kind of mixed data. Not really moving much. Strength is in though. Look at this market move. Look at this candlestick at 8:37, 9:37 market time from all this stuff. We are starting to creep higher here, up to almost 19.1s. I don't know what I want to do in my trades. Oh yeah, we're also supposed to get Bessent speaking, huh? Let me see where. EU's Dombrovskis will update EU economic forecast next month. Initial calculations point to impact of tariffs to amount to 0.2% on EU economy. Y'all want me to stream Bessent, right? Yeah, so I already got the video on live. I'm just waiting for it to start. We got new home sales at 10. We got Bessent speaking at 10 as well. So I just hope it's not long for Bessent. It depends on what kind of views we get to be honest. How does the Tesla pump make sense? I really don't know. I'm not sure why it's pumping up. I really don't know. All right, guys. So we got Bessent getting ready to speak. Look at that rejection right there at this top of this 115 level here. I see Nvidia coming down. All right, so we got this scheduled here. And again, we got new home sales going live too. Yeah, so remember, in 5 minutes, I'm going to switch out my headphones here real quick so that we can cover Scott Bessent's speech. I don't know how long this is going to be either. Market's kind of crazy. Look at this pullback happening now too. Yeah, we'll see what this does to the market. Let's kind of put this here. Kind of like put it right there, and then maybe like move this over. I'm gonna put the NASDAQ up. I got almost too many levels on the NQ. All right, here's 19,000 again. So here's 19K. Do I buy that dip in micros? All right, so we just made another $40 or so on our other account. So doing pretty good there. We got 4 minutes until this. I am going to put full screen up here and just cover this price action right now. And maybe edge this over a little bit. Pull this up some. And cut out the... Make sure we get the full thing. Pull myself out the way. There we go. All right, again, we got Treasury Secretary Scott Bessent speaking. We got new home sales in 3 minutes too. Yeah, I'm gonna turn the just to make sure we can hear this. I'm gonna turn the music up. I want to make sure I can hear this really well. So we're gonna turn the volume on the desktop audio up like we always do, just so we can make sure we can hear it really well. If you need me to turn it up more after he starts speaking, just let me know. I can. So like my job with these economic reports is just to make sure we get some like really good audio relative to everybody else. I'll put up to 6. There we go. That makes sense. All right. You guys think this will be bullish or bearish? All right, so here we go. It just started. I got some hold music. All right, guys. You guys ready? We're waiting here. I'm going to unmute this music because I just can't deal with it right now. All right, guys. Hey, Treasury Secretary Scott Bessent. Let's see what he says. Let's see if he says anything good, bad about the economy and the market. Here's the NASDAQ, still holding at 19K, still running. All right, we got less than a minute here. Hit the live button next to the play button. Make sure you're fully caught up on stream. Make sure we are live. I could do the full screen, but I want to watch the market as it happens. Let me refresh this. Make sure we're fully live. Yep. All right, cool. All right, so we're waiting. White House official says they are not considering something unilaterally. It would be part of negotiations, according to CNBC's Havers. When talking about China, adds not seeing evidence that U.S. is engaging in negotiations with China. This news just happened. So that is the news that just happened. We put it up on screen. New home sales just came out. They showed up at 724,000 new home sales. Very strong new home sales data. 724K, increase of 7.4%. Last time 3.1%. So much stronger new home sales than expected here, guys. So new home sales just came in better than expected. 724 versus 680 expected million. Kind of jolted the market a little bit at 10 a.m. You can see it. Still waiting for this to start. We're live. We're waiting. Treasury Secretary Bessent says IMF and World Bank serve critical roles in international system. I don't know if he put out his speech. He published it early. No, they're still up. Still waiting for this guy to start. Here we go.
That I have the opportunity to welcome to the stage our distinguished speaker, Scott Bessent, who is the Secretary of the U.S. Department of Treasury. On January 28, 2025, Scott Bessent was sworn in as the 79th Secretary of the Treasury of the United States. As Secretary, Mr. Bessent is responsible for the U.S. Treasury's wide-ranging mission to maintain a strong economy, foster economic growth, and create job opportunities for all Americans by promoting the conditions that enable prosperity at home and abroad, as well as managing the U.S. government's finances. He is also responsible for strengthening U.S. national security by combating economic threats and protecting the financial system. Mr. Bessent has been in the global investment management business for 40 years, visiting 60 countries, interacting with international leaders and central bankers. He is regarded as a currency and fixed income specialist. Mr. Bessent is also a frequent contributor to economic journals and business publications. Secretary Bessent will deliver keynote remarks followed by an in-conversation session with Tim Adams, who will join the Secretary on stage shortly after. Secretary Bessent, the stage is yours.
Good, and thank you. Excuse me. Good, and thank you for that kind introduction. It's an honor to be here. In the final months of World War II, Western leaders convened the greatest economic minds of their generation. Their task? To build a new financial system. At a quiet resort high up in the mountains of New Hampshire, they laid the foundation for Pax Americana. The architects of Bretton Woods recognized that a global economy required global coordination. To encourage that coordination, they created the IMF and the World Bank. These twin institutions were born after a period of intense geopolitical and economic volatility. The purpose of the IMF and the World Bank was to better align national interest with international order, thereby bringing stability to an unstable world. In short, their purpose was to restore and preserve balance. This remains the purpose of the Bretton Woods institutions. Yet everywhere we look across the international system today, we see imbalance. The good news, it doesn't have to be this way. My goal this morning is to outline a blueprint to restore equilibrium to the global financial system and the institutions designed to uphold it. I have spent the bulk of my career from the outside looking in on financial policy circles. Now I am on the inside looking out. I am eager to work with each of you to restore order to the international system. To achieve this, however, we must first reconstruct the IMF and World Bank or reconnect the IMF and the World Bank with their founding missions. The IMF and World Bank have enduring value, but mission creep has knocked these institutions off course. We must enact key reforms to ensure the Bretton Woods institutions are serving their stakeholders, not the other way around. Bringing balance back to global finance will require clear-eyed leadership from the IMF and World Bank. This morning, I will explain how they can provide that leadership to build safer, stronger, and more prosperous economies all around the world. I wish to invite my international counterparts to join us in working toward these goals. On this point, I wish to be clear. America first does not mean America alone. To the contrary, it is a call for deeper collaboration and mutual respect among trade partners. Far from stepping back, America First seeks to expand U.S. leadership in international institutions like the IMF and the World Bank. By embracing a stronger leadership role, America First seeks to restore fairness to the international economic system. Nowhere is the imbalance I mentioned earlier more obvious than in the world of trade. That's why the United States is taking action now to rebalance global commerce. For decades, successive administrations relied on faulty assumptions that our trading partners would implement policies that would drive a balanced global economy. Instead, we face the stark reality of large and persistent U.S. deficits as a result of an unfair trading system. Intentional policy choices by other countries have hollowed out America's manufacturing sector and undermined our critical supply chains, putting our national and economic security at risk. President Trump has taken strong actions to address these imbalances and the negative impacts they have on Americans. The status quo of large and persistent imbalances is not sustainable. It is not sustainable for the United States, and ultimately, it is not sustainable for other economies. Now, I know sustainability is a popular term around here, but I'm not talking about climate change or carbon footprints. I'm talking about economic and financial stability, the kind of sustainability that raises standards of living and keeps markets afloat. International financial institutions must be singularly focused on upholding this kind of sustainability if they are to succeed in their missions. In response to President Trump's tariff announcements, more than 100 countries have approached us, wanting to help rebalance global trade. These countries have responded openly and positively to the President's actions to create a more balanced international system. We are engaged in meaningful discussions and look forward to talking with others. China, in particular, is in need of a rebalancing. Recent data shows the Chinese economy tilting even further away from consumption toward manufacturing. China's economic system, with growth driven by manufacturing exports, will continue to create even more serious imbalances with its trading partners if the status quo is allowed to continue. China's current economic model is built on exporting its way out of its economic troubles. It's an unsustainable model that is not only harming China, but the entire world. China needs to change. The country knows it needs to change. Everyone knows it needs to change, and we want to help it change because we need rebalancing too. China can start by moving its economy away from export overcapacity and towards supporting its own consumers and domestic demand. Such a shift would help with global rebalancing that the world desperately needs. Of course, trade is not the only factor in broader global economic imbalances. The persistent over-reliance on the United States for demand is resulting in an ever more unbalanced global economy. Some countries' policies encourage excess savings, which holds back private sector-led growth. Others keep wages artificially depressed, which also suppresses growth. These practices contribute to global dependence on U.S. demand to spur growth. They also lead to a global economy that is weaker and more vulnerable than it should be. In Europe, former ECB President Mario Draghi has identified several sources of stagnation, and he has outlined several recommendations to get the European economy back on the right track. European countries would do well to take his recommendations to heart. Europe has already taken some long overdue initial steps that I applaud. These steps create a new source of global demand and also involve Europe stepping up on the security front. I believe global economic relationships should come to reflect security partnerships. Security partners are more likely to have compatible economies structured for mutually beneficial trade. If the United States continues offering security guarantees and open markets, then our allies must step up with stronger commitments to shared defense. The initial actions from Europe on increased fiscal and defense spending are proof that the Trump administration's policies are indeed working. The Trump administration and the U.S. Treasury are committed to maintaining and expanding U.S. economic leadership in the world. This is especially true at the international financial institutions. The IMF and World Bank serve critical roles in the international system, and the Trump administration is eager to work with them so long as they can stay true to their missions. And under the status quo, they are falling short. The Bretton Woods institutions must step back from their sprawling and unfocused agendas, which have stifled their ability to deliver on their core mandates. Going forward, the Trump administration will leverage U.S. leadership and influence at these institutions and push them to accomplish their very important mandates. The United States will also demand that the management and staffs of these institutions be accountable for demonstrating real progress. I invite all of you to join us in working to refocus these institutions on their core missions. It is in our collective interest to do so. The IMF. First, we must make the IMF again. The IMF's mission is to promote international monetary cooperation, facilitate the balanced growth of international trade, encourage economic growth, and discourage harmful policies like competitive exchange rate depreciation. These are crucially important functions to support the U.S. and global economies. Instead, the IMF has suffered from mission creep. The IMF was once unwavering in its mission of promoting global monetary cooperation and financial stability. Now it devotes disproportionate time and resources to work on climate change, gender, and social issues. These issues are not the IMF's mission. And the IMF's focus in these areas is crowding out its work on critical macroeconomic issues. The IMF must be a brutal truth teller and not just to some members. Today, the IMF has been whistling past the graveyard. Its 2024 external sector report was entitled Imbalances Receding. This Pollyannish outlook is symptomatic of an institution more dedicated to preserving the status quo than answering the hard questions. Here in the United States, we know we need to get our fiscal house in order. The last administration ran up the largest peacetime deficit in our nation's history. The current administration is committed to fixing this. We are open to critique, but we will not abide the IMF failing to critique the countries that most need it, principally surplus countries. In line with its core mandate, the IMF needs to call out countries like China that have pursued globally distorted policies and opaque currency practices for many decades. I also expect the IMF to call out unsustainable lending practices by certain creditor countries. The IMF should push more proactively official bilateral lenders to come to the table early to work with borrower countries to minimize periods of debt distress. The IMF must refocus its lending on addressing balance of payment problems, and its lending should be temporary. When done responsibly, IMF lending is at the very core of its contribution to the global economy. When markets fail, the IMF steps in and makes resources available. In exchange, countries implement economic reforms to resolve their balance of payments issues and support economic growth. The reforms undertaken during these programs are some of the IMF's most important contributions to a strong, sustainable, and balanced global economy. Argentina is a fitting example. I was in Argentina earlier this month to demonstrate the United States' support for the IMF efforts to help the country reset financially. Argentina deserves the IMF support because the country is making real progress toward meeting financial benchmarks, but not every country is so deserving. The IMF must hold countries accountable for implementing economic reforms, and sometimes the IMF needs to say no. The organization has no obligation to lend to countries that fail to implement reforms. Economic stability and growth should be the markers of the IMF's success, not how much money the institution lends out. World Bank. Like the IMF, the World Bank must be made fit for purpose again. The World Bank Group helps developing countries grow their economies, reduce poverty, increase private investment support, private sector job creation, and reduce dependence on foreign aid. It offers transparent and affordable long-term financing for countries to invest in their own development priorities. The bank, along with the fund, provides extensive technical support to promote debt sustainability among low-income countries, which empowers those countries to stand up to coercive and opaque lending terms from other creditors. These core functions of the World Bank complement the Trump administration's efforts to foster safer, stronger, and more prosperous economies in the United States and the world. But the bank, like the IMF, has strayed in certain respects from its initial mission. The bank should no longer expect blank checks for vapid, buzzword-centric marketing accompanied by half-hearted commitments to reform. As the bank returns to its core mission, it must use its resources as efficiently and effectively as possible, and it must do so in ways that demonstrate tangible values for all member countries. The bank can use its resources more efficiently now by focusing on increasing energy access. Business leaders the world over identify unreliable power supply as one of the primary impediments to investment. The World Bank and African Development Bank's Joint Mission 300 initiative to expand energy access to 300 million more people in Africa is a welcome effort. But the World Bank must respond to countries' energy priorities and needs and focus on dependable technologies that can sustain economic growth rather than seek to meet distortionary climate finance targets. We applaud the recent announcement that the World Bank will seek to remove prohibitions on support for nuclear energy, which could revolutionize energy supply for many emerging markets. We encourage the bank to go further in giving countries access to all technologies that can provide affordable baseload generation. The World Bank must be tech neutral and prioritize affordability in energy investment. In most cases, this means investing in gas and other fossil fuel-based energy production. In other cases, this may mean investing in renewable energy coupled with systems to help manage the intermittency of wind and solar. The history of humanity teaches a simple lesson. Energy abundance sparks economic abundance. That's why the bank should encourage an all-of-the-above approach to energy development. Such an approach will make World Bank financing more effective, and it will reconnect the bank to its core mission of economic growth and poverty alleviation. In addition to increasing energy access, the World Bank can use its resources more effectively by starting to apply its graduation policy. This would allow the bank to focus on lending to poorer, less creditworthy countries. This is where World Bank support makes the biggest difference for poverty and growth. Instead, the World Bank continues to lend every year to countries that have met the criteria to graduate from World Bank borrowing. There is no justification for this continued lending. It siphons off resources from higher priorities and crowds out the development of private markets. It also disincentivizes countries' efforts to move away from dependency on the World Bank and toward job-rich, private sector-led growth. Going forward, the bank must set firm graduation timelines for countries that have long since met the graduation criteria. Treating China, the second largest country in the world, as a developing country is absurd. While it has been at the expense of many Western markets, China's rise has been rapid and impressive. If China wants to play a role in the global economy commensurate with its actual importance, then the country needs to graduate up. We welcome that. The World Bank should also implement transparent procurement policies based on best value. It must help countries move away from procurement approaches that prioritize only the lowest cost bids. Such procurement policies reward distortive and subsidized industrial policies that undermine development. They may also stifle the private sector and incentivize corruption and collusion and result in greater long-term cost. Procurement policies based on best value are better from both an efficiency and development perspective, and their robust implementation will benefit the bank and its shareholders. Related to this subject, I wish to send a strong, and I emphasize strong, message about procurement policies as regards Ukraine. No one who financed or supplied the Russian war machine will be eligible for funds earmarked for Ukraine's reconstruction. No one. To conclude, I invite our allies to work with us as we rebalance the international financial system, refocus the IMF and World Bank on their founding charters. America First means we are doubling down on our engagement with the international economic system, including at the IMF and the World Bank. A more sustainable economic system will be one that better serves the interests of the United States and all the other participants in the system. We look forward to working with all of you in this endeavor. Thank you.
All right, so that is Treasury Secretary Scott Bessent's comments. The market honestly has been pretty choppy and flat leading into all of this. Like, here's the NASDAQ right here. And you got to see, we're kind of just going sideways. I mean, we're not really doing anything too crazy. Yeah, the market's kind of flat. Remember, tomorrow we have Google earnings, jobless claims, unemployment filings, and a lot more. So we also had some recent news. We also have some recent economic news that the White House would look at lowering tariffs on Chinese imports pending talks with Beijing, according to Reuters. The India Finance Secretary Seth says he expects the direct impact of tariffs on Indian GDP growth to be around 0.2 to 0.5%, 0.2 to 0.5%. So that's it for Scott Bessent. Again, if you want to help support the channel, check out TopStep. TopStep, great way to learn to day trade. We are green on this account, red on the other one. No PDT rule in futures. You could day trade the S&P, the NASDAQ, basically the SPY and Q price action in futures. It took me a long time to realize that because there's no PDT in futures. That's the benefit of futures. You're wondering, why should I day trade futures? No PDT restrictions. You could day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies and some platforms, commodities, and more. Day trading patterns are very similar, and it's just a cheaper way to get your foot in the door. Like, most day traders lose for years before they win. Starting out this way, you get a $50K funded account if you can make $3K in profit on a demo first, and it's $50 a month. If you lose $2K, you're eliminated from the challenge. But if you can make $3K without losing $2K first, following their rules, they fund you $50K, 90% split. Have paid out $200 million or so approximately. And just a great way to learn. Most day traders lose. It's limited risk. If you pass that test, you get a 90% split on the funded account. So, and again, they've paid out hundreds of millions. Great way to learn. If you want to check it out, understand all this stuff on screen. I'm biased because I get paid by them. Sometimes I do trade off stream. You're not going to see it. Not an investment professional. I'm not liable if you lose. Understand CFTC 4.41, hypothetical simulator performance have limitations, and all this good stuff on screen. But again, I genuinely think it's good for traders. So if you want to check it out, here is the link. You can also find it pinned at the top of the chat. I'm going to get out of here, guys. Y'all be good. Yeah, I'll see you guys later. Y'all be good. Have a great day. I'll see you guys tomorrow. Tomorrow we got, what do we have tomorrow? Tomorrow we got a bunch of stuff, to be honest. Tomorrow we have jobless claims, durable goods, existing home sales, Neil Kashkari speaking, and then Friday we got consumer sentiment. Next week is honestly the crazy week, though. Like, next week's freaking crazy. Yeah, y'all be safe out there. I'll see you guys later. Be good. Have a great day.